Can an ordinary Singaporean guy, someone who grew up in a HDB flat, actually build a $1 million investment portfolio? The answer is yes. And today, I am going to show you exactly how I've done it. What's up everyone? I am a Singaporean, or Sinkie, and welcome to the channel. For a long time, I thought that building serious wealth was something reserved for the ultra-rich. But over the years, I've learned that with the right mindset, a solid plan, and a whole lot of patience, it's possible for everyone. So in this video, I'm doing something I've never done before. I'm giving you a complete, transparent look into my investment portfolio, which, as at the end of July 2025, is valued at over $1,065,000 US dollars, or about 1.37 million Singapore dollars. My goal here is simple: to show you what's under the hood, break down my wins and losses, and hopefully inspire you to see that you can do this too. So grab a coffee, get comfortable, and let's dive in. So for the month of July, the portfolio had a cumulative return of 3.36%. Now, how did that stack up against the market? The S&P 500, represented by the index, did 2.24 in the same period. So I'm really happy that we managed to outperform the market this month. It doesn't always happen, but it's great when it does. And what is this portfolio made of? Looking at my long positions, it is pretty straightforward. It's about 93% in equities and about 7.5% in cash. The cash is there waiting for opportunities. And in terms of what kind of equities, it's split between individual stocks at about 60% and ETFs at about 32.5%. Okay, now for the part that you've been waiting for. What are my biggest bets? Let's break it down. My top 5 holdings excluding cash, and which represent 37% of my portfolio. Okay, so coming in at number 5, we have ETHA, the iShares Ethereum Trust ETF, with a value of about 60,000. My thesis here is that this is my asymmetric bet. I strongly believe in the long-term disruptive potential of blockchain technology and decentralized apps. Ethereum is the foundation layer for so much of that innovation. Holding this ETF gives me direct exposure to the asset's price movement in a regulated, secure way, without the headaches of self-custody. It's a small slice of the pie with the potential for outsized growth. And fourth on the list is the QQQ, which is the Invesco QQQ ETF, and I have it at about $68,000. So basically, if you want a concentrated dose of innovation, this is it. The QQQ tracks the Nasdaq 100 index, which is packed with the world's most influential tech and growth companies. While there's overlap with the S&P 500, the QQQ is much more tech-heavy. My thesis is that technology will continue to be the primary driver of economic growth for decades to come, and this ETF is my core position to capture the upside. And my third largest holding is the SPY, which is the SPDR S&P 500 ETF, with a value of about $76,000. This is a bedrock of my entire portfolio. The SPY is one of the oldest and most popular ETFs, and it tracks the S&P 500 index, giving me broad diversified exposure to the 500 largest companies in the US. My investment thesis couldn't be simpler. By owning SPY, I am betting on the long-term growth and resilience of the American economy. It's my low-cost, set it and forget it foundation for wealth building. Now for number 2, a company we all know and use every single day, Google or Alphabet, coming in at $77,000. My thesis for Alphabet is that it's a digital fortress with multiple modes. You have Google Search, which is a virtual monopoly. You have YouTube, the king of online video, and you have Google Cloud, a powerful player in a booming industry. On top of that, you have their other bets in cutting-edge fields like AI and self-driving cars. For me, owning Alphabet stock is owning a piece of the present and a future of the internet. And finally, my number 1 largest position, taking out about 11% of my portfolio, is Granny, the fund strat Granny Shorts US Large Cap ETF, and I have it at about $117,000. Now, this one might be less known, but my thesis is that I'm looking at a slightly contrarian approach. This ETF focuses on high-quality large-cap US companies that have been somewhat overlooked or are trading at reasonable valuations. It's a strategy that backs on solid fundamentals winning out over market hype. I see it as a smart way to complement my broader index holdings, potentially adding some alpha by focusing on these granny short stocks. So there you have it. 2 broad market ETFs for stability and growth, a tech-focused ETF, a bet on the future of the internet, and a wager on the future of finance. Of course, a portfolio isn't just about what you own, it's also about how your holdings perform. Every month has its heroes and villains. Let's look at the top 5 contributors to my returns in July. Okay, so first the winners. The absolute star of the show this month was Figma, which contributed a massive 124 basis points to my portfolio's return. That's huge from a single stock. Next up, we have a tie. Both Google and Ethereum ETF had a fantastic month, each contributing 58 basis points to my gains. It's great to see 2 of my top holdings performing so well. My top holding, Granny, also did well, adding 40 basis points. And rounding up the top 5 was GEV or GE Vernova, which contributed 27 basis points. Now for the other side of the coin, it's important to be transparent about what didn't work. Here are my top 5 detractors for the month. The biggest drag on my performance was Bitmine Emergent Technologies, which put my portfolio down by 73 basis points. Ouch. Tech, crypto can be volatile, and this one was definitely this month. Next was ARM Holdings, which have a negative contribution of minus 40 basis points. Next we have Costco, which detracted 21 basis points. Hermes International with a 17 basis points detraction. Palo Alto Networks detracted 16 basis points. Look, nobody likes to see red, but this is a crucial part of investing. You will have positions that go down. The key is to have a long-term thesis. For these names, my belief in the companies hasn't changed. So I'm holding on and weathering the storm. Investing is a marathon, not a sprint. So that's a breakdown. A $1 million portfolio built 1 stock, 1 ETF, 1 month at a time. I want to end on this note. I really am just a regular guy. I didn't inherit this money. I don't have some secret Wall Street connection. This portfolio wasn't built overnight. It was built over many years with consistent saving from a regular salary, disciplined investing even when the market was scary, and an unwavering belief in the power of compounding. It started with the first $100 and then the first 1,000, and slowly, painstakingly it grew. You don't need a finance degree or a 6-figure salary to start. You just need a plan, the discipline to stick to it, and the courage to take the first step. Start with what you have, be consistent, and let time become your greatest ally. If this video has been helpful or inspiring in any way, I'll be so grateful if you could just hit that like button and subscribe to the channel. I have a question for you. What is the #1 stock or ETF in your portfolio right now? Drop it in the comments below. I'm genuinely curious to see what you guys are investing in. Thank you so much for spending this time with me, and keep learning, stay disciplined, and I'll see you in the next video.